Welcome to the Real Estate Tax Tips channel. My name is Cherry Chen. I am a chartered professional accountant located in Oakville, Ontario, Canada. My mission is to become the Google map for hardworking Canadians seeking financial freedom. Today we're going to talk about the top 10 tax deductions for real estate agent. To understand real estate agent taxes, you need to understand how real estate agents are hired or how you are categorized. Real estate agents, like many other professionals, can own their own businesses or be hired as employees. When you're an independent contractor as a real estate agent, you're self-employed and you are operating your own business. Operating a business means that you are allowed to deduct all reasonable expenses incurred for the purpose of earning the income, subject to a bunch of exceptions. On the other hand, if you work as an employee for a particular brokerage or a builder directly, there could still be certain expenses that you are allowed to claim as employment expenses if you generate the expenses for earning your employment purposes. But before we get into the nitty-gritty, make sure that you hit the subscribe button below, turn on the little notification button so then you can stay on top of the latest tax tips. If you have any questions about any of your tax deductions, make sure that you put it in the comment section below and I can get back to you. With that, let's get started. Okay, so what can real estate agent deduct? Before I get into the top 10, top 12, top 15 tax deductions that a real estate agent should not miss, we have to understand as Canadian taxpayer, we need to be able to understand there are two things that govern all these tax deductions. The first thing is the general tax deductibility rule. The second one is that in Canada, you always need to earn your tax deduction. And I'll explain each of them in detail. The governing principle of the general deductibility rule is that basically the Canadian Income Tax Act allows Canadian taxpayers to deduct reasonable expenses incurred for the purpose of earning either the business income or property income, subject to a bunch of exceptions. And of course, this means that as long as you are able to establish the cause and effect relationship between incurring the expenses and earning the particular stream of income, you can potentially deduct the expense against the income. So next time when you're incurring an expense which helps you earn your business income, keep the receipt. Now, let me just use an example to explain. If you are advertising and you get a lead in and you're paying for the advertising expense, the Facebook ad, your website expense, you get the lead in, you call the lead and you firm up a deal and later on the deal closes. And there is a direct link between incurring the advertising expense, the Facebook ad, the website cost, to earning the particular stream of the income. There's a cause and effect relationship. As long as you are able to establish that cause and effect relationship, you're eligible to deduct the expense. Subject to a bunch of exceptions, but in my example, advertising is not part of exception. So in other words, as long as you are able to establish that cause and effect relationship, you should at least keep the receipt because you would not know all these exceptions that are allowed and not allowed. If you're unsure whether you can deduct certain types of expenses, compile all your receipts and at year end, have a conversation with your real estate tax accountant. They will be able to tell you if you can deduct these expenses or not, just as I advise my client. Now, the second governing principle that we all have to understand is we all have to earn our deduction. Now, I always say that in Canada, you got to earn your deduction. This means that as a minimum, you need to keep receipts to support your expense deduction. If you give a cash rebate to your client for a successful deal, because sometimes in our business, in the line of business that real estate agents do, they are often asked by their clients to give a cash rebate. And if you do, document the name of the client, the address of the completed deal, and provide proof of payment. This is called earning your tax deduction. Because if you want to claim that deduction, CRA wants to know the details. CRA wants to know how you're paying that person, and they even want you to be able to provide the proof that you actually made a payment. A cash payment is harder for deduction than something that is substantiated with paper and email and everything else that is corroborative evidence to support your claim. As a word of caution, if you do your financial statements or if you do your tax returns based on the credit card statements or bank statement, bank transaction, they're generally not sufficient to substantiate your claim. So you have to keep the receipts, even though those are little tiny printed receipts from the cake that you took your client out for a meal. You would still need to keep that receipts. You also need to keep them in legible copy. So a lot of the time we advise our clients to take a picture of the receipts these days. Those are the two overall governing principle that we all need to understand for real estate agent tax deduction. Now let's get into the details of the top 10, top 12 tax deductions a real estate agent should not miss when they file their real estate agent tax return. As a real estate agent, you incur many different types of expenses to generate income. As I mentioned before, based on the overarching governing principle, the key to tax deduction is to establish that cause and effect relationship, and you will be able to get some sort of deduction, even if it is fall under the exception rule. Now, one of the main thing that you would incur is meals and entertainment. To qualify as a deduction, even though it is only 50% deductible, you're required to incur the expense for the purpose of earning the commission income. If you take your clients out for lunch or dinner, that is a deductible meal, even though it is only 50% deductible. However, if you take your parents out for lunch and they are not your clients, that lunch is not a tax deductible expense. Specifically for meals and entertainment, you are also required to keep the original receipt, the original invoice, plus the Visa receipt if you pay by Visa card or credit card, any credit card. There are two receipts that are usually generated. You are required to keep both receipts to substantiate the breakdown, to provide the breakdown of the meal, as well as the actual proof of payment. You may also want to write down the person's name on top of the receipt when you take the picture, when you keep the record of the receipt. Because if you ever get audited, CRA is going to ask for the client's name as well as your relationship with the person that you take the person out for dinner or for a meal, and they also ask for the phone number of that person. They may never call that person, but that's how they go. They ask for the moon, and you will have to provide all the documentation to earn your deduction. So the second common expense among real estate agents that they would deduct is advertising expense. And advertising expense can include like the staging costs, the costs that you are required to incur for the purpose of listing the property or selling the property or buying the property. So as an example, one of the expense that you may incur as a listing agent could be the cleaning cost of the house, or the staging expense, or the contractor that you would have to pay to paint the house in order for the house to be ready for sale. So these are expenses that are common among real estate agents, and any advertising costs incurred for the purpose of earning your business income, again, is tax deductible. This includes your website costs, website developer costs, hosting fees, web design costs, Facebook, YouTube, Google, Instagram, and even LinkedIn advertising expenses. But make sure you have a conversation with your accountant who understands your situation to advise you accordingly. Number 3, insurance expense. Insurance expense is required by Real Estate Council of Ontario, RECO, specifically in Ontario, to carry on your license. If you have your own office space, you might also need to carry general liability insurance for your office space. These are legitimate expenses for you to earn your commission income, and therefore they are also tax deductible. Number 4, brokerage fees and other related charges. Typically, real estate agents belong to a real estate brokerage, and they hold their license through a real estate brokerage. And brokerage in turn charge a fees to have you operate using their brokerage name, as well as process the paperwork for you. Fees you pay to your brokerage to maintain your license are deductible. Typical charges include like your desk fees, transaction fees, split of commission, franchise fees, office administration charges as well. One word of caution here. Every year when we do the tax returns for our real estate agent client, we always get the breakdown of the charges being charged by the brokerage. The reason is because sometimes when you receive the T4A slip from your real estate brokerage, the amount could be recorded on a gross basis before the commission split. Some brokerage choose to record it on a net basis after the commission split. So we would all often need to do a reconciliation by looking at your annual reconciliation sheet issued by your real estate brokerage. So make sure that you provide that information to your accountant to pick up all the required expenses, all your deductions. Number 5, professional dues and memberships. Professional dues and memberships include fees you pay to your board. In Ontario, the biggest board is Toronto Real Estate Board, the TRAP. License fees with the real estate governing body, your license fees with RECO are tax deductible, and then also other professional membership. These are, again, expenses that you incur for the purpose of maintaining your license as well as earning your income, so therefore 100% tax deductible. Number 6, it's a more controversial one, client rebates. Client rebates, it's very common in the real estate agent business world, like all other expenses. Client rebates are incurred for the purpose of earning the real estate agent income. It is a way to secure business, and sometimes it is a way to say thank you to our repeat clients. There are 2 different ways to issue a client rebate. One is directly through your real estate brokerage. You can tell your brokerage to pay your client directly. So let's say you earn a $10,000 commission bill from your brokerage, and you agree to give $1,000 back to your client. The way that you can do it is that you instruct your brokerage to pay that $1,000 directly to your client, and then you will only keep the $9,000. That is the cleanest way to deduct that expense, because the brokerage has already done all the paperwork for you, and the money and the check was issued directly to the client. Now, another way to issue client rebate is by way of cash. It's very common in the marketplace. You would give cash of $1,000. In my particular example, if you give cash $1,000 to your client, it is very difficult to justify to CRA for the $1,000 client rebate tax deduction. So the way that you would do it is, ideally, in a perfect world, write a check to your client, that $1,000, write it down, mention the client's name, mention the deal's name, and write down client rebate as the reason, and keep the canceled checks once it's cashed. So this would help you to substantiate the client rebate deduction. Number 7, coaching, education, and conferences. Coaching costs are deductible expenses provided that they are incurred for the purpose of helping you improve your business income. So you are allowed to deduct expenses that you incur to hire a coach, specifically relating to growing your business. If you're hiring a coach, a personal trainer as your coach for your own health well-being, it may be difficult for you to provide that cause and effect relationship, and therefore that personal trainer would not be a tax deductible expense. Now, a lot of us also go to attend a lot of education and conferences events to learn something to improve our business. So these conferences would be tax deductible, provided that you don't incur more than 2 conferences a year. So you can only claim 2 conferences a year on your personal tax return. If you own your real estate agent business in a corporation, you can deduct as many as you want. And again, these conference expenses have to be related to your real estate agent business. It cannot be some health conferences that are unrelated, or yoga conferences that are unrelated to your real estate agent business commission income. Number 8, client gifts and gift cards. Client gifts are generally tax deductible if you can tie the client's gifts to your commission income. Again, it's important to make sure that you are documenting the person's name or your client's name that you're gifting to. Client gifts can include appliances, TVs. I see a lot of real estate agents giving TVs to the clients. Make sure you purchase the proper gift cards as well if you choose to give a gift cards to your clients. And make sure that, again, you document the person, the client that you're giving the gift cards to earn your tax deduction. Number 9, subcontractor, assistants, and salary employees. If you are growing your business, my understanding is that from working with so many real estate investors and real estate agents, is that hiring an assistant can be your very first step to scale your business. I mean, I myself has my own assistant and I now cannot understand or see how I survive without her. I witnessed it firsthand and how my husband is also a real estate agent, how my husband's assistant helped him grow his team from 2 agents to 5 agents. So, from a tax and legal perspective, you can hire an assistant as an employee or as a subcontractor. And hiring an assistant as a subcontractor loosely means that you're hiring another business to do the work for you. And if you hire an assistant as a subcontractor, then that means they are also allowed to deduct their expenses that they incur for the purpose of earning the business income that you pay to them. Now, hiring someone as an employee means that you have someone full-time dedicated to help your business. The obligation is very different under each arrangement, but both of them are tax deductible for the purpose of calculating your income tax liability. For a better understanding to decide whether you should hire an assistant between an employee or subcontractor, make sure that you take a look at my book. I have already detailed the distinction between the two. Number 10, home office expense. Now, you're eligible to deduct home office expenses as long as you meet one of the following criteria. Now, your home office is the principal place of your business, or you use the space exclusively to earn business income and you use it on a regular and ongoing basis to meet your clients, customers, or anyone that's related to your business. Now, let's assume you qualify with one of the criteria listed above. It's important that you qualify for one of the criteria before you can earn it. You can actually deduct home office expense. What can you really deduct? Well, you can deduct the following expenses: the maintenance costs such as heat, home insurance, electricity, and cleaning supplies. You can also deduct property taxes, mortgage interest, home internet repairs. I would not suggest you to claim any capital cost allowance on your home, but if you rent, you can deduct the rent. And the part that you can deduct is only a proration based on the amount that you use, the floor space that you use for the purpose of earning your income. This can be calculated based on the size of your home office in relation to the size of your home. So let's use an example to explain. If you have a 1,000 square foot home and you use one of the bedrooms as your home office, and which is approximately 100 square feet. So 10% of the mortgage expense, 10% of the mortgage interest, 10% of the property tax, utilities, internet, they are all tax deductible. But it also means that you are required to keep all the receipts for all the expenses that you incur for the purpose of maintaining your home. Now, number 12, automobile expenses. Deducting business use of automobile expense is allowed and often one of the most overlooked deductions. To properly deduct automobile expenses, the first thing you need to keep is an auto log. It is a lot of work to set it up right. Once it is set up and there is no substantial change in your business usage, you may be able to keep a smaller logbook in subsequent years. Deductible automobile expenses include fuel and oil, interest, insurance, license and registration, maintenance and repairs, any other expenses that you incur relating to operating your vehicle. I usually include my 407 ETR bill. Some people include their CAA membership as well. Lease payment or capital cost allowance are also allowed to be deducted depending on the way that you own your vehicle. If you own your vehicle, you can claim capital cost allowance. If you lease it, you can deduct lease payment. The total of these expenses is then prorated based on the business use mileage or rental use mileage for deduction purpose. That basically concludes all the common tax deductions that you are allowed to deduct as a real estate agent. Now, just keep in mind is a list of sample common tax deductions that you will see. And always keep in mind the general tax deductibility rule, because sometimes I may not have covered all the expenses that a real estate agent is allowed to incur, but you might have other type of expenses that you incur. As long as you can provide a cause and effect relationship, there may be a case for you to deduct the expense. So keep the receipt as well. So the second principle is to keep the receipt to earn your deduction. Don't forget about these two principles. These two guiding principles will help you to earn your deduction and maximize your tax deduction and minimize your tax liability. Until next time, thank you for listening. Hi everyone! I just want to quickly share with you, I recently published a book on Amazon called Complete Taxation Guide for Canadian Real Estate Agents. The book is going to give you tips on how to pay less tax and keep more commission. If you want to get a copy of this book, make sure you visit the website RealtorTaxTips.ca/book and get your free copy now.